Hello, and welcome to the Exponential Growth Podcast, powered by Analyst Investors. I'm your host, David Olivencia, co-founder of Analyst Investors, and a passionate advocate for leveraging innovation and technology to drive success. In this podcast, we'll dive into the strategies that top leaders, investors, and entrepreneurs are using to navigate and thrive in this era of accelerating technological change. Whether you're looking to lead more effectively, make smarter investments, or understand how to harness disruptive technologies for exponential growth, this podcast is for you. Each episode will feature conversations with visionary thinkers, industry pioneers, and innovative leaders who are redefining what's possible in today's rapidly evolving world. So if you're ready to start and stay ahead of this curve, let's get started. This is Exponential Growth. Well, hey everyone, welcome to another edition of the Exponential Growth Podcast. Today, I have a very special friend, somebody I've known over a decade, really close to me in a couple different areas. We're co-founders of Analyst Investors. She's a co-general partner with me on our Analyst Ventures Fund, $20 million fund backed by Bank of America, some family offices, and about 90 or so amazing individuals and about 11 or so companies we've invested in. She's on the board of UBS Funds, Pathway Funds, Mercer Funds, BMO Financial, top bank in North America, and several other boards. And also on the board of Analyst Investors as a chair. So she's chair of one of the largest, fastest growing angel investing groups in America. Welcome again to the Exponential Growth Podcast, Adela Cepeda.
Thank you so much, David. I'm so excited to be here again. And I love what you're doing with Exponential Growth. Love the newsletters you write are just so on point, always relevant at the time they come out. So excellent. I know your following is growing.
Excellent. Well, Adela, you know, amazing background, financial services. I know on the last podcast, those people can go back. We walk through Adela's kind of life story. We're gonna, if you're interested in that, it's an amazing story, by the way. You can go back to the earlier podcast. But today, you know, Adela and I, we spend a lot of time looking at startup deals. We're running a venture capital firm. We've raised our first fund very shortly. Here we'll be on to our second fund. We're already deploying from that, and so. You know, Adela has went from, you know, in the financial services space, you know, whether it's mutual fund boards, running her own company and municipal bonds, on the board of BMO. Now she's in this interesting space called venture capital. So today we're going to really dive a bit into venture capital, call it early stage investing, because you're also part of, you know, Analyst Investors on a part, you're a co-founder and, you know, you're on the board. So let's, you know, maybe let's kind of start 10-ish years ago. I mean, you've known about startup investing before that, but roughly 10-ish years ago, you started becoming more aware of it, and then obviously started cutting your individual checks. Just walk us through maybe a little bit of your, like, the financial background, and then how you started becoming more aware of this asset class, right, of startups and investing in startups and all of that. And then let's kind of start there, and then we'll talk about, you know, how it's evolved a bit.
Yeah, great. Well, you know, I started as an investment banker at a college. And so in investment banking, you get introduced to different size companies. You know, somebody knows you're a banker. Oh, I know somebody. And the company could be a startup. There was no such language back then, but, you know, it's a starting company, or it could be something in manufacturing that's been around for, you know, 50 years. So you had to kind of take them seriously, depending on where the lead came. So I saw a lot early on, you know, and I saw that one of the companies I helped to take public, XL Datacom, it was guys from IBM that took the, I think it was called the Silver Lake processor. It was the first one that had a very active secondary market. And so they had a file on all the secondary units. And with that file and with the selling and buying in the aftermarket, they established a very successful tech company. It was the frames that were more portable than the original, huge apparatuses. This was like the size of a refrigerator, but it was the technology of trading those products. But you had to understand where it fit in within all of IBM's products and other products. And so I remember that became an IPO. So we followed it for several years until it had enough size to warrant a good multiple and a good size. You have to have a certain minimum size to be public and get sufficient following. So I loved that. And I loved the research related to the technology and the changes that were happening. That deal, I was going to say, would probably have been in 85, 86, around there. So that was already halfway into my 10-decade career in investment banking. So I was very aware of it. Smith Barney also had a venture group. So clearly we were first dibs for anything that got to the size, either for a significant M&A transaction or an IPO. So very aware of this sector. What I wasn't aware of was the opportunity that it created, outsized opportunity for outsized wealth creation. I saw the IPO, I could see, those guys became significant millionaires. I saw that there. I didn't attach the same valuation because I wasn't in that space directly to what early stage investing could do at that point. Later on, I did, and I've invested in different things at early stage. But it's an area, it's a space that I believe is critical to wealth formation, actually to the subsidy that's required to create long-lasting technologies. You got to have that early stage. And you and I, because of our age and where we are in our life cycle, we have seen the exponential growth of technology as a significant factor in almost every area, not just manufacturing, not just, avionics, right? We can get everywhere around the world. In medicine, I mean, you name the area. Falls a little bit short, maybe in bricks and mortar. We still need, housing, and it's pretty old line. But, even in a building where I'm 100-year-old building, this is all wired I can control it from wherever I am in the world, my lights, everything. So it's an amazing era. And it's one where we have an opportunity to participate. And I'm just so proud of working with you on helping to bring these early stage opportunities to our network of angels, but also to our investors in the fund.
Yeah, it's one of those where, I knew about, me personally, right? I knew about tech my whole career. I was an engineer, tech, all that kind of stuff. I knew about startups that were doing very successful, right? Google explodes, while I was, early on in my career, Microsoft, Apple, all these other ones early on in the career. Those are kind of like the OGs of Intel, others that were kind of like the first wave of startups. And and I said, amazing how fast they're growing, the growth, the upside, where they're going, how big the markets are. But I never knew kind of like how would one invest? And venture capital was very relatively a new, I mean, and then even as it got more mature, it was really for the most part the coasts, San Fran, New York, Boston-ish, it was like 90% of it, right? And then it, started to go, but never knew how to get involved. Like, okay, I get it. I get you can invest, but how do you invest very early, like at these things, like, get in before everybody else does when the valuations are low, right? And we I had come across the Notre Dame, Irish Angels, and I remember that was my start, right? In terms of just, with a group and investing, and they have a pretty good portfolio and track record, and some winners in their portfolio. Chime, Trading View, two unicorns, and a couple more coming that I got to see. And I remember as we got to know each other, I was saying, hey, Adela, there's this interest, I'm looking at these companies and, there's some outsized returns. And actually, here's a chance where actually you can get, you get 100 people, everybody puts in a small check, and you get to participate in, but, potential upside, right? This is high risk, high reward. And then as I'm explaining this to I was talking to you about this. Maybe just share with the audience like kind of what was going through your mind and how you were thinking about it, as I was just kind of telling you my experience with with the Irish Angels.
No, I liked it. And what I liked about what you were telling me was the disciplined approach, right? Consistently, I mean, I think every quarter you were getting to see some really great opportunities. And when you brought the concept to our small group, I remember there were 3 companies, and when I showed them to my kids, they really liked them. I mean, it was like, oh yeah, mom, this is it. One of them is it. And it was I was more caught up in the logistics. Well, how do where wire? I hate it. I always have hated wiring. So, oh my gosh, I have to wire a check and what and how does it work? I was more stuck up on that. And I thought that would be a hurdle. But look at the technology that exists now to do that pretty seamlessly.
Yeah, like
And
legal documents to Zoom to storing
seamless,
videos to data
DocuSign and
rooms, DocuSign.
Sidecar, all these. And then the other interesting aspect about it was the focus that you already had and that we agreed would bring the most value on technology. And so, I'm having been a big believer from seeing what I saw during my investment banking time. I really believe passionately that this is where the major opportunities are for change and for valuation and for appreciation. So I
Yeah,
was
if you want
so
the scale,
excited.
it's important, right? If you want to get,
Yeah,
look at all these big companies they're leveraging technology to the max, right?
yeah. So that was just it was fun. I thought we would be pretty alone in that, I like, okay, I see it. You already were a strong believer. I didn't think we would have the, we started out with 50 um uh
Angels,
founding members.
members, yeah.
50. That's companionship. And that's a core group that weighs in what we were doing, and that gave validity to what we were trying to do in a very clear way, where you bring the check and they brought the checks. And so and you pay to be a member. And so that was so reinforcing that we were on the right track. It was just exciting. It opened up almost a new career for me. I had just sold AC Advisory, after 20 plus years in muni financial advisory work. And so it was just great. I loved it.
Yeah, so we, to listeners, so we kind of launched this angel investing group, Adela, myself, initial 8 or so kind of people that got it off the ground. Then we got to 50 founding members, and then pretty much we've doubled in membership every year. Fast forward 5, 6 years later, we're almost 700 members national, invested in about 30 or so companies, amazing sponsors, 30 sponsors. So we built probably one of the top largest, one of the largest, one of the fastest growing angel investing groups in America, and we still got a lot of room to grow. And our niche is we leverage the power of Latino growth to find, fund, and fuel the best ventures. And we've been at it, and we still, we still have a lot of upside. So we're only at it, we still got I can only imagine what happens the next 6 years.
I know it's
Uh,
going to be fun. I
it's
know
gonna be
that.
fun. So okay, so we did that, and then you and I, we decided, hey, we think there's an opportunity to put some accelerant on this thing, and maybe there's some opportunities that our group is passing, that the market is big. Let's do a venture fund, and you and I, we're investing in several venture funds. We can talk a little bit about that. We had some experience, doing that. Maybe you can start there and share your experience with kind of investing in a venture fund and what that means. But then you and I, we launched this venture fund. So maybe before we jump into, like, you and I launch it, you've invested in a couple different venture funds. Why did you do it? To the extent you could probably share who you've invested in if you want. And what have you learned from that? And what do you like about it or not like about it? And, as an investor in venture funds.
Well, it's the same as investing in a mutual fund versus in one stock. So there's the diversification aspect. And just like when you invest in a fund, there's a portfolio manager. So those are the GPs, and they have a strategy and in a sense, for what they want to invest in. I mean, they tell you, but basically it's based on their connections and their ability to anticipate the market size that this company can achieve and to assess what's in most cases a very, very young team in an incipient industry, right? That's hard. Two guesses that the team probably hasn't worked together before, and that the niche is actually going to turn out to be lucrative in terms of revenue at a minimum. So, but I think you had worked with the team at Motivate, and when we talked to them, I liked uh, one of the things in investment banking, you learn to assess the individuals a lot. Like, will they withstand the scrutiny of a research department? And then whether they're likable, because that sells to the sales force. They like to assess personalities as well. So using, my experience, I like that team, and I liked what they were doing. You said they had been very engaged with Irish Angels. So, we've invested twice there. We invested in a smaller fund that, you and I and a few others created in one of your top investment companies that we still hope will become, it's doing great. So it should do great. That was all very, very interesting to me, a lot of potential. And it's one of the things that I like about venture. You can't ever be alone. I mean, if you're the only investor in, that's not going anyplace. You gotta work with other investors. Nobody wants to take that risk by themselves, and they shouldn't. And by the way, it's a very risky asset class, but it's an asset class that deserves attention and some exposure in almost every portfolio. Smaller as you're building your wealth portfolio, and then maybe greater as you establish a clear view to your own retirement, your whatever funds you need, and to take care of your family and all that. And then maybe if you still have excess capital, this is one area that needs it, because it's an area that if you succeed, it provides exponential returns.
Totally. Totally. Yeah. So now, so then whatever, 3.5, 4 years ago ish, you had exposure to startups. You've obviously had this financial services, career across multiple financial services areas. And then we get together and we talk about creating a venture, hey, so now you're going to take a new role as a venture capitalist, right? By the way, and I think female venture capitalists, general partners that run fund, it's like the numbers. I want to say 5%, 3%. I mean, it's of all general partners out there. Just a data point I want to say. But we come in, and what's going through your mind, right? When you say, "Hey, I'm gonna now launch my career, take another, step in my career to be a venture capitalist," right? So like 15 years ago, 20 years ago, if somebody said, "Hey, Adela, you're going to be a venture capitalist," what would you say? So what's going through your mind when you're getting ready to make this jump into venture capital?
So not so far-fetched from other activities I've had. My first foray into entrepreneurship was launching a fund, fixed income. So the most conservative area of investments, right? I mean, A-rated or better, uh, mortgage-backed securities for a little bit of pizzazz. And so I worked to build that fund initially with two other women, and Abacus. I couldn't stay the long haul because of changes in my life and having to support a family, a young family, pretty early on. And so being an entrepreneur, it's expensive because you're giving up some concrete income, right? Most of the time in order to get things launched. So I had to go off and do other things. But I had already raised money. I had raised money in the equity sector for others. I had raised real estate funds for another fund through my relationships in the Chicago area and other areas. So I felt kind of comfortable about the fundraising. I didn't assess what a small percentage of most funds are invested in venture. So it's very small. And if the equity market is down, there's even less. And when the equity market is strong, it also is tough because why invest in a private, illiquid area when the market is, jumping the way it has been? So it's been difficult that way to get the kind of funding that I had originally envisioned. But it'll all come down to how well the fund performs, and I'm confident that with your insights, my experience, that it's going to be great because our hope is to really pay back the investors in a significant way.
Amen. Amen. Right. It's like, hey, you got investors, they put their trust and their faith in us, and our job, our responsibility, wake up every day working hard to give them a great return. Right. So, okay. So you've been now a venture capitalist, yeah, at least 3 years. You can argue early on, an early stage investor, a little bit longer, bit longer. Key learnings. What have you learned in, I don't know. I'm sure there's a lot of learnings. I'm learning new stuff all the time. What are some key learnings, being an early stage investor and a venture capitalist? What are some key learnings that you have?
Yeah, well, it's definitely important to lean into your expert teams. I think that's really key. I think that no matter how smart we think we might be, bringing in other perspectives is really significant. And it highlights something that, we could have missed. So that's been a key lesson. Being very conscious of runway. What are we funding? Well, how long a runway? Because
And a bit for those who may are listening don't understand what runway is. Explain to them what runway is.
Yeah, like how long the funds raised will support the company, assuming that you know what the loss per month is. So how many months do they have of being able to go and run the company without running out of money?
Yeah, like
So
cash. How much cash do you have?
yeah, what's
So you
the
don't
cash
die.
burn? The burn rate, I
Yeah,
guess. Do people
yeah. The
know
burn
burn
rate
rate?
against the cash
The
you
burn
have.
rate. So that's really important, very important, critically important. And then really monitoring on a consistent, whether it's, weekly, bi-weekly, monthly, that there's an adherence to the plan and that things are coming in as expected? And if not, what is it going to be? I mean, pivots can be a good thing, but they can also create expenses that weren't expected and totally change the break-even analysis, totally change the burn rate. So those are some of the learnings. Also, even in our market, which is private market, we've seen, right, that some of the technology, some of the fervor of the equity markets gets into it. When we started investing, we invested in companies that were fully employing AI technology, but it wasn't called AI. They were collecting data to establish, I'm thinking like Certiverse, right? To establish new testing procedures and tests, and it wasn't called that. And that was they were one of the first companies that the Angel Group invested in, and then that our fund invested in. So starting in 2020, but then the fervor is AI, and we have to remain confident in our understanding of what a company's technology is doing, regardless of these major movements that suddenly distort the markets in some cases, and I'm not saying that there is a dislocation today. I think what's happening today is there is a realization that this technology is going to have substantial impact in everything. Well, so did, the iPhone, or, the phone. I mean, even before the iPhone, BlackBerry, it changed everything. The BlackBerry changed everything. More than that original big phone, the BlackBerry became essential in business. And then, everything on the computer, the access to computers, the laptops, it changed everything. And that's fine. I think what is happening now is the further recognition that these changes happen, they happen fast, and that people are trying to assess quickly what the full impact is going to be. But that there's an impact, absolutely.
Totally. A couple of just reflections on some of the lessons you learned, right? The pivots are good, but pivot to those are the startup has a plan and a direction that they want to go. Things change. The market doesn't really like maybe what they have, so they have to pivot. They have to move. They have to change their product, their market or whatever. So they pivot. Pivoting is okay, and sometimes is needed. And most startups, in one way or the other, pivot. Look, I mean, I think Airbnb pivoted, right? They were like cereal for the elections or something like that, right? And others pivot. But I say you don't want to be pivot so much that you're salsa dancing, right? So you want to make sure you want to make sure you're pivoting too much. So that was one. The other thing that I think you mentioned that I knew a little bit about, but I didn't kind of appreciate it enough is like when you and I were making bets, right? We're looking at hundreds of companies, and then we have to make bets on what is going to grow and scale, what is not going to get wiped out by a competitor, right? Like a big competitor, and that stuff is happening every day. And so, you mentioned just like keeping up, the research and understanding the trends and what's going on. You really have to be on top of it, on top of what's going on top of the news, on top of latest trends, on top of latest technologies, because you're making bets on the future. You're making bets on the future. So to the extent and all the tools available, AI, all this different analysis that you can use, I guess it's fun in one aspect. I'd say it's challenging in another because you kind of always got to keep
Hard.
up. And then then you got to take action. You got to make a bet, and so, any additional reflections on that? Do you feel the same way or any things you want to add on that?
Oh no, I think you're 100%. And in my case, before I have a conversation with anyone in the morning, I've already read 2 or 3 papers,
Yeah.
including the Wall Street Journal, the New York Times, and any business news that comes my way. And this is because even any kind of world news, national news, it has an effect or has the potential to have an effect.
Totally. Totally.
So
Like
I'm
look at
trying to, stay ahead. And I think that anyone that thinks you can just walk into it and, you know, s- just make a bet, it's not like that. There's a lot that goes into it to understand what is being created, not to mention the intuitive aspects that I discussed before about the teams and all of that. But to understand the technology and its applications, you have to understand applications where in the world, and what does a change in war, the geographies of what does that have the potential to do to your small investment over here? It still can have an effect.
Yeah. It was remind me of our investment that our fund did in Helios AI, right? And and
Yeah,
then the war breaks out, and they were in the Wall Street Journal talking about
yeah,
how, hey,
right.
I mean, yes, there's supply chain, but there's, I think it was fertilizer, right? It was like fertilizer, and it's like it has ripple effects, whatever, six,
Our
7, 8 months
startup,
on. Yeah, our startup,
our startup,
they were in the Wall Street Journal.
half a page
Yeah,
in Wall Street Journal
Wall Street Journal,
with,
and that's, yeah. And I think waking up, I think because it wasn't announced
I don't know,
like
I think you
it.
sent it, you sent me the
And I'm like,
article
what
because
the
you
guy? I was
got to
like,
it earlier.
I think, I go, maybe, it's like uh, Francisco Martin Rayo. I said, oh, wow, that's interesting. I go, is that our friend? Like maybe,
It was
then maybe it was another. I
funny.
go, he's in the Wall Street Journal. I said, oh my gosh. But it just goes to your point that you gotta, there's all these macro things, and then, and then, that's some, and I guess to our listeners out there too. I mean, I think that's something that I also do and have done every day, is like before I've read all that, that's kind of like the minimum, right? Like the Wall Street Journal, the base,
Yeah.
and maybe you have some, some little bit of news. I mean, obviously there's some social feeds and stuff like that. And Adele and I, we've done pretty well. And that's the habit that we both have. If you don't have that, you should consider it. I think it's done. It's been, I mean, and by the way, for me, Adela, I think it's been 26, 7 years. I think every day I've been, I think I had a teacher in college, he was an econ teacher. I went to an engineering school, all, bunch of, engineers. And it was, and he was taught an econ, and he said, and he was an Asian guy. He said, my recommendation, you read the Wall Street Journal every day.
So good. And
And
for
then,
me it was,
in college, you're an engineer and you're doing, it
yeah.
just kind of went in one ear and went out the other. And it wasn't until, whatever, my early 20s or after I graduated, and then really pretty much for the most part every day, 20,
No, I
26
mean,
years.
since high school, we were told you got to read the New York Times. You need it for your SATs. So I think 16, 17 years old, my mother got the subscription. And then I was in munis, so I had to be on top of political news. So I used to read all the Chicago newspapers. I still do, maybe not with the same fervor. I'm more focused on the national, and of course Wall Street Journal is a basic, and you have to, and they cover technology pretty well, and then all
Yeah.
the others that do. There's just a lot. Financial Times, there's a lot, and you
Yeah.
just have to figure out how to scan it and extract what you need. There is a lot of news content out there, so you just can't read everything, but you oversee the technology section, see what's, and then when I'm not traveling in my office, I'm constantly, and this has been for, I don't know, 25 years. In my office, there has to be a TV, and I'm focused on the news, business news channels.
Like CNBC, you have it kind of like sometimes just
Yeah,
kind of
it's got to be
flashing in the
on.
background.
I mean, when I sold my company, they said, no, nobody has a TV in their office. And, when I was doing the transition to the buyer, and I said, I'm just so sorry. I just can't. I can't work if I don't have. I can't, because I can't show up at lunch. Something has happened, and I'm the one that doesn't know. I'm supposed to be the advisor. I'm supposed to know.
Yeah.
So that changed. I had my TV, and it's the way I can work.
So, Adela, so now, we're into it 3 years, right? Just give our audience a, sense of kind of, okay, well, what's out of the next couple years? What's next? What's
Well,
next, and how do they stay connected to you, and what all the good stuff that you're doing?
I mean, I do keep a profile on social media, on LinkedIn, and the Angeles, we're so connected, not just on LinkedIn, but on some of the other social media. So that's one way to stay connected. But I'm excited about where our fund is, but we're substantially deployed, right? We have a little bit more to do, and then launching our next fund, which is going to um, be larger, hopefully, and so help us have more substantial participation in our investments so that we can have a greater opportunity to help them, achieve their connections. And I just think that with capital at a higher level and the networks that we bring, not just the Angeles network, which is amazing. Over 750 members, top of their field, or, on track to be at the top of their field. That's just an opportunity that we can bring to our port companies to access almost in every industry, right? What their need could be. We have somebody that's in that space that can help them get to it sooner. And that's very precious and valuable to startups who, like I said before, for the most part, are young teams. They don't have the depth in the networks that we can bring. So we bring that, and then together with opportunity for greater capital infusion, really see them through the challenges of early stage investments.
Yeah, I mean, it's there are a couple kind of thoughts and follow-ons there, right? I think the network is amazing, right? And we're going to continue to build the network, right? And so we got an amazing network. Our members are by the way, this is a little sidebar. But, we co-found this organization, we built it, it's got members, it's growing, it's great, it's all fun, a lot of fun. We get together, we learn, but there's two members. I just find, like they met and now they're dating. And they're both single or both, I don't know, either remarried or divorced or whatever. And like, it's like you kind of step out, it's actually like you're impacting lives, right? And by the way, I co-founded another organization, and I know two people met through that and they got married. And it's like one of these things that, it's like it's kind of interesting. So little
Well, I
sidebar.
love that. I love that. And I tell the guys all the time, come on, what's going on? We need to see that happen more. Yeah.
Exactly. Exactly.
You have great
So,
young members that
yeah, we got
yeah,
them all. So we're going to continue to build, the network. An amazing thing, our social media presence. I think you're going to continue to see that grow and build. And I think, the other thing is like we're on the venture on both sides, whether it's the angel group and our venture firm. I mean, we're building, we want to build a durable, strong, impactful top performing, top tier venture firm, right? You look at the, for those who are out there, you look at the top venture firms that are out there. I mean, they all start out small. I mean, small is relative, but they all start out with their fund one, and they grow over time in fund two, fund three, fund four, and they grow from there. And we're taking those steps, and so that's I think a bit of what we're going to continue to build and see out there. So. Adela, any last closing remarks before? I know you got a lot of stuff going on, but any last closing remarks?
That venture is hopefully an opportunity for so many more, and that hopefully what we're doing through Angeles investors and through our fund is an opportunity to break it down into accessible bites, right? We're not asking the entry level, the cost of being an investor in many of these companies or funds is pretty high. And what we've done with Angeles investors is break it down so that you can come in with fairly nominal level and join a nucleus of others and watch it become something. And I think that's I love that we're doing that. I think that access and inclusion is so critical. And so I love that we're giving access to so many that wouldn't have even thought of it. So hopefully it will be access to very positive returns.
Amen. Amen on that. Well, hey, Adela, thank you so much for jumping back on the pod. And I'm sure there'll be more as we continue this journey and different checkpoints. But thank you again, Adela.